You're listening to the Connecticut Real Estate Edge podcast, your source for tips and tricks on building wealth through real estate in Connecticut. You will get the best techniques from leading local experts in real estate and lending. Now, here's your host, Robert Weinberg.
Welcome to Connecticut Real Estate Edge. In today's episode, we have a really special guest with us, Mr. Jay Conner, also known as the Private Money Authority. Jay is a seasoned real estate investor, and he's raised over $8 million in private money, averaging currently profits of over $82,000 per deal. And he's here to share his wealth of knowledge with us on real estate investing, especially for our younger audience and those first-time home buyers, first-time real estate investors, and newer real estate professionals. So Jay, welcome to the podcast, and thank you for coming, sir.
Robert, thank you so much for inviting me to come along and talk about what I am most passionate about, and that is, of course, private money. The reason I'm so passionate about it is because since 2003, my wife, Carol Joy, and I and the team, we've been investing in single-family houses, and private money is the number one game changer and strategy that's had more of an impact on our business than anything else we've ever employed. I mean, when we first started using private money in 2009, our business tripled the next 12 months because of having the private money funding available. And of course, we know what was going on in 2009 in the midst of all those foreclosures and banks weren't lending. And so, yeah, I'm pretty excited to talk about private money and how it can help your audience catapult their business.
Yeah, most definitely. And this is something that's new and that we really haven't covered a lot on this podcast and on our channels because I'm a mortgage lender. That's my profession. And I'm not a private money lender. I'm an institutional mortgage lender. I work with big banks, mortgage companies, pension funds, all the different lending options out there. So, private money is something that is out there, but it's not something that we've talked a lot about because most of our listeners are more apt to using the normal mortgage channels to get funding. So we'll uncover some new options for them in the episode. But can you start by talking a little bit about how you got into real estate investing in the first place and how you got that coveted title that you hold, the Private Money Authority?
Sure. Well, as I mentioned, Carol Joy, my wife, and I, we started investing in single-family houses here in eastern North Carolina in a really, really small market. Our total target market where we buy houses, single-family houses, and that is our focus, single-family houses, is only 40,000 people. Only 40,000
Wow.
people. And we do 2 to 3 deals a month, averaging $82,000. I don't say that to brag whatsoever. I say that to make a point. And that is, you don't have to be in a big market in order to have very significant income. And in fact, there's an argument to be made that there's a lot of advantages in investing in outlying markets or in the suburban areas or the smaller areas because you don't have to deal with the competition that you have to deal with when you're in the big cities. I would rather be a big fish in a small pond than a small fish in a big pond. So anyway, prior to getting into single family houses and investing in them, I was actually raised in the mobile home business or manufactured housing business, whereas the homes were built in a factory. And the consumer financing for that product fell out of favor with Wall Street back in the early 2000s. So I knew if I ever got out of mobile homes, I wanted to get into single family houses. So I started out, Robert, very traditionally. All of my funding was institutional lenders. I had a great relationship with what was at the time Branch Bank and Trust, BB&T. Truist has now bought them out. And for the first 6 years, Robert, from 2003 to 2009, 6 years, that's all I knew to do was to borrow institutional money. And so in January of 2009, I remember it just like yesterday. I was sitting at this very desk and I had 2 houses under contract, Robert, that represented over $100,000 in potential profit on those 2 houses back then. Well, I had them under contract. I hadn't called my banker yet because I had a line of credit. Well, let me rephrase that sentence. I thought I still had a line of credit. And so I called up my banker January 2009. I told him about the two deals I had under contract and the funding that I needed for
Hmm.
the deals. And Robert, I learned like that. And you might be old enough to remember
Hmm.
this story in your from your own
Oh yeah,
perspective.
many times we've heard this one.
And so I learned like that over the phone that my line of credit had been closed, no notice to me, which would have been nice because back then, when you put earnest money down here in North Carolina, you couldn't get it back in
Hmm.
2009. So, anyway, I said, Steve, what in the world are you telling me that the bank has closed my line of credit? We've had a great relationship for 6 years, never been late on payments. And he says, Jay, don't you know there's a global financial crisis going on right now? I said, no, but Steve, now you just gave me a global financial crisis because now I don't have a way to fund my deals. He says, well, we're just not loaning money out to real estate investors. Robert, I hung up the phone and I sat right here at this very desk. And I'm going to share with your audience right now the question and the powers in the questions. I'm going to share the question that I asked myself right after that phone call. And this question, I'm telling you, will help you fix any problem you've got in your life, from financial to career to health to relationships. I don't care what it is. And here's the question I asked myself. I said, Jay, who do you know? You know, it's who, not how. I said, who do you know that can help you with your problem? And by the way, these people running around saying, oh, every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem, right? And
Hmm.
so I said, Jay, who do you know that can help you with your problem? I immediately thought of a good friend of ours who lived in Greensboro, North Carolina at the time. Jeff Blankenship is his name. And I called up Jeff and I told him what happened with my line of credit at the bank. He said, well, Jay, welcome to the club. I said, well, what club is that, Jeff? He said, that's the club of being having your line of credit closed at the bank. They closed my line of credit last week. I said, well, Jeff, how are you going to fund your deals? He says, well, have you ever heard of private money? I said, no. He says, have you ever heard of self directed IRAs and how individuals can use their retirement funds and be a passive real estate investor and be a private lender and loan their money out either tax deferred or tax free as far as the income they get? I
Hmm.
said, what in the world are you talking about? So, from Jeff telling me about that, I studied private money. I studied self directed IRAs. I established a relationship with a self directed IRA company to where I could refer people
Hmm.
to them if they had retirement funds that they weren't happy with the returns. So, what did I do, Robert? I put a program together. I put an opportunity, I put my private lending
Hmm.
program together to where I would offer people initially in my own connections, people I go to church with,
Hmm.
people in my cell phone, and I would offer them my program the opportunity without any kind of deal attached to it. Because, you know, Robert, desperation has got a smell to it. And
Hmm.
so I knew if I went to talking to somebody about private money and having a deal for them to fund, I'm already sounding desperate.
Hmm.
I raised $2,150,000 the very first 90 days that I've been cut off from the bank. And you know what, Robert? I did it all, and I still do it today without asking anybody for money. And they say, Jay, how do you get millions of dollars in private money and funding and you don't ask anybody for money? Well, here's the secret sauce. I put on
Hmm.
my teacher hat, my
Hmm.
private money teacher, and I just started teaching people in my own connections what private money is, how they can get high rates of return safely and securely without bringing up any kind of deal, you know, for them to fund. And then once they were read, they told me how much they had to invest. They liked the program. They liked the rate of return. They like how I protect them and I'm not borrowing unsecured funds and all that. They would tell me how much they got. Maybe it's just investment capital, or if it's a retirement funds they have, I'd introduce them to the self-directed IRA company that I'd established a relationship with. They'd move their money over their retirement funds over to that self-directed IRA company. And then here's exactly what I told them, Robert. I said, I will put your money to work for you just as soon as possible. So maybe a few days goes by, a week or two, and then I call them up. Here's the rest of the story on how to get funding without asking for it. I'd call them up and I'd give them what I call the good news phone call. Well, here's the script. Robert, let's say you're one of my new private lenders. You've told me you've got $150,000
Mm-hmm.
to invest. So I call you up. You answer the phone. Here's the good news script. You answer the phone. I say, Robert, I've got good news. In fact, I've got great news for you. I can now put your money to work. I got a house under contract in Newport for an after repaired value of $200,000. The funding required for the deal is $150,000. Closing is going to be next Thursday. You'll need to have your funds wired to my real estate
Mm-hmm.
attorney's trust account by next Wednesday. I'm going to have my attorney email you the wiring instructions. That's the end of the conversation. I'm not asking you if you want to fund the deal. That's the most stupid question in the world I could ask. Of course you want to fund the deal. You've been waiting for the phone
Mm-hmm.
call, and particularly if you have moved your retirement funds over
Right.
to the self-directed IRA
Mm-hmm.
company that I've introduced you to.
Mm-hmm.
You're waiting for me to put your money to work. So it's a very simple sequential process of teaching, leading with a servant's heart, exposing people to stuff and information they never heard about, to having them ready to go, and then we giving them a call with a good news phone call. It's
Let
a
me
simple
actually
as that.
stop you right there for a second, Jay, because you've given us a lot to unpack on what you've discussed. I want to give our listeners a little bit of context because we've talked in some other episodes about real estate syndication and about raising money for real estate projects in small increments. We've discussed even some real estate crowdfunding ideas that allow you to invest as little as a couple $1,000s to get involved in these deals. So before we move on, I would want to ask you, what is the minimum investment generally to get involved with this private money scenario where people can put their money to work? What's the smallest that you allow or that you see to make it viable?
Sure. In my program, of course, the beautiful thing about it, and here's a big mindset shift I had to get straight when I started. Traditionally, it's the lender that makes the rules. It's
Mm-hmm.
the lender that does the underwriting, right?
Mm-hmm.
In this world of private money, the lender does not make the rules. We, as the borrower, make the rules. We set the interest rate, we set the term, we
Yep.
set the maximum loan to value. I mean, that's a 180-degree shift in mindset, right? So, anyway, the reason I say that is because the answer I'm going to give you is what I have put together for my program and what I offer to
Mm-hmm.
as an opportunity. And it's going to vary where you are in what
Right.
price point, what price point of
Of
properties are
course.
you doing? For my program, the minimum is $30,000, and
Okay.
here's why. I can't use $30,000 typically in my market to buy a house, but I can use $30,000 to rehab a
Yes.
house. So I can borrow $30,000 and put that private lender's money in a junior lien or in a second position, junior to the first mortgage
Yep.
that I used for the purchase.
That's very reasonable, and that gives context. 'Cause I think if the minimum's 100,000, it's going to take a lot of people a while to get that type of money saved. From what you're saying, that type of barrier to entry is reasonable. So my next question for you is going to be private money versus institutional, or private money versus, a mortgage lender, right? A normal process that people go through. Talk about the advantages of private money, or what is really the niche of person that would use private money, finance using private money versus the other channels of getting real estate finance.
Sure. Well, the list is long, but I'll give the big ones. First of all, is what I just said. It puts you in more of a control of your business because you're doing your own underwriting, really,
Mm-hmm.
is what you're doing. But the big ones are, first of all, is speed. I mean, all my offers, I offer to close in 7 days. Well,
Mm-hmm.
I can't do that with institutional money, right? Typically.
Right.
So, and I buy a lot of houses. I mean, people can't be out of their house in 7 days, but I'll buy the house. I'll give them half of their proceeds at closing. Then they get the other half when they move out, and that's based on whatever we agree on. Do you need 30 days, 60 days, 90 days, or whatever? So as a result, I buy more properties because speed, I can move fast. Another
Okay.
big one, another big one is there's no limit to the number of private lenders that I can have. There's no
Hmm.
limit to the amount of private money I can
Right.
borrow. With institutional money, I promise you, there's going to
There
be a
is.
limit depending on the institutions that you use, but there'll be a limit to the number of deals that you can have
Hmm.
in process at one time with the amount of private money. Um, no appraisals. That
Hmm.
ties into the speed. That ties into the speed of it. Um, Another big one. I mean, really, all private money deals are a no down payment proposition
Right.
because I borrow 100% of the money for the purchase. I borrow 100% of the money for the rehab. And if there's equity in the property, I can pull some equity out at purchase. So instead of taking money to the closing table out of my pocket or my checkbook, I'm actually picking up a check when I buy. My favorite phrase on my real estate attorney's check stub is excess cash to close. There's
Love
always
it.
excess cash.
Yep.
Now here's a double check as to whether you should do the deal or not. You see, this formula or this process of picking up a check when you buy. I mean, who wants to get paid to buy houses, right?
Hmm.
This formula does not work unless you are buying at a deep discount.
Yep.
You got to be buying at a deep
Right.
discount for this to even work. And your biggest profits and your biggest discounts are on houses or properties that do need renovation,
That's
that
for
do need
sure.
rehab. That's why my average profit is $82,000. But here is a double check. If you and my maximum I borrow is 75% of the after repaired value. I didn't say 75% of purchase.
Right.
75% of after repaired value. For example, the little role play we just did with an after repaired value of 200,000 and I'm borrowing 150, well I could be buying that house for 80, 90 or
Yep.
$100,000. I'm borrowing 150, so I'm bringing home when I buy at least a $50,000 check. So here's the
Okay.
deal. If you Now when you're doing a rehab, if you cannot bring home a check when you buy the property, you're paying too much for the property. It's as simple as that.
I agree with you. I think some things that you said that I want to reiterate here, I think is on the private money side, you can get deals done that couldn't be done otherwise. That's the big takeaway. There's a lot of red tape. There's a lot of different ins and outs, appraisals, underwriting, et cetera, to get any sort of mortgage loan, right? Even if it's a non-QM or one of these creative finance, there's still underwriting involved. There's still appraisals involved. There's still a lot that goes into it. This private money scenario strategy, I should say, completely gets rid of all that red tape. And then the second thing is the speed. Money talks, speed talks, and speed and I should say the slowness of getting a deal through the process kills a lot of deals. Okay, so the speed part, I don't care how good your lender is, getting a loan closed in 7 days is very, very difficult right now on the institutional side. Even if you have appraisals and stuff, it's tight. Now, I do believe that in the next 12 to 24 months, there's going to be changes in technology and AI that's going to allow loans to go through the system a lot quicker, but still, it's not going to be as quick as cash money. That's where the private funding comes in. So I want to model this out for a lot of people listening that are going, hey, I'm a first time buyer, like I'm a first time investor. This doesn't resonate with me. How can I make this work? And the way it looks to me, Jay, is that instead of someone saying, I want to buy this single family home and putting 20% down and getting a mortgage for the rest, right? It's, hey, I want to buy this single family home. I'm not putting any money of my own in, and I'm going to have a network of investors. I'm going to have a network of people that want to share in the profit. So I'm going to go to that network, let them know this opportunity that they can invest in and let them fund the deal. And I'll just oversee them and manage it. I, as the buyer, will just be the one that makes the bulk of the profits, I guess, and kind of the project manager, so to speak, right? So you do have to get good at finding deals. This isn't like, something that you can just wake up and decide to do. That's what Jay does. And he'll talk a little bit about what he offers as far as resources. But I think that's a big takeaway. Like eventually, if you're listening to us today, you probably want to have a real estate portfolio of multiple properties. You should have a primary home that you own. I believe so. You might want to have a rental property or two that you own individually, that you personally have done. That's fine. What we're talking about with Jay is a way to expand real estate, a way to create large profits quickly, a way to not have to deal with lenders like me, not have to deal with the bank. At least up front, we can help with some delayed financing and some other strategies to get equity out after you buy it. But I love this for acquisition because I'm seeing more and more investors do this even on a small level, go into their parents, go into their neighbors. Hey guys, I got a deal for 300 grand. What can we get here? And having 3 people invest 100 grand each, right? Now you got your 300 grand. And now that's on a small level, but you can do that and create a network of investors on a big level. That's what Jay is really about doing. Am I explaining it in a way that makes sense, right? So what advice do you have to first-time buyers that are hearing this going, okay, yeah, I either just bought my first home or I'm getting ready to buy my first home, but this intrigues me. Like, I want to create a big portfolio. I want to do these deals where I can make 50, 80, 100,000 on one deal, right? What advice do you have for them? What tips do you have if they're considering this, of like really how to get started, especially if they're overwhelmed?
Well, that's a great question, Robert, and I'll tell you why. My answer is going to be unconventional, but it's the truth. I can teach anyone the ins and outs very simply on raising private money. But there's one thing you got to get straight first before we even get into, okay, well, here's the interest rate that I recommend you offer, which by the way is 8%. I've been paying 8% simple interest ever since 2009. So the first thing to get straight is your mindset. And I'm going to be very specific about that when I say mindset. You see, we are so ingrained and programmed because this is all we've known to do up until now, and that is to borrow using traditional institutional lenders. That's all we've known, right? That's all I knew until 2009, and I had to find a different and a better way. So we've got the mindset of, okay, if I'm going to get a loan, then I've got to apply. My credit score is going to be pulled. I've got to sell, beg, persuade, talk the lender into giving me this loan. I may have to show my financial statements. Definitely my credit score is going to be pulled and looked at. We see all that we got to eradicate, all that we got to get rid of, because none of that traditional borrowing has got anything to do with this world. So the mindset we got to get straight on is, I'm not asking, I'm not applying, I'm not trying to talk anybody into doing anything. What are you doing on the other side? What you're doing is you are serving. You're serving. Listen, I got 47 private lenders right now funding our deals. 47, everywhere from 30,000 up to over $1 million each. And you know what's interesting, Robert? Not one of these 47 people had ever heard of private money or private lending until I put on my teacher hat and I led with a servant's heart, and I showed them how they could have an alternative way to make high rates of return safely and securely. So that's the first thing, is leading with a servant's heart. Hey, look, new real estate investors, they may not tell me, but I know they feel it. They got the fear of rejection, fear of rejection. Let me ask a question. How can you be rejected if you're not asking anybody for anything? All you're doing is sharing. All you're doing is sharing information. I mean, the worst time to be raising capital and private money is when you need it for a deal. That's the worst time to be trying to raise capital, right?
Yep.
Best time to be raising capital is when you don't have a particular. Listen, there's always going to be deals. There's always going to be deals. I don't care what market we're in. I mean, I've got more leads coming in right now than I had last year coming in, and they're all for sale by owners.
So what you're saying, though, is build that private money network, build that private money business now when you don't have a deal. Create that foundation today or up front. Then when you have a deal, you can go to that network. Like you're saying, you have these investors ready to go. same thing. And like, this isn't that complicated. I keep thinking about an investor that I've worked with a few times on delayed financing named Jason down in Florida. The guy's doing deals left and right, just like you're talking about, all private money. He's got like 8 or 9 investors that go in with him on all these deals. He's got extensive experience now in rehabbing and doing this stuff. And he's just ticking them off, you know? And the last one I saw, he made over $100,000 on, got just insane profits, and it's possible. But I think a question that I want to ask you about is, with the competitive real estate market, you aren't doing these type of profits or getting these type of deals through the MLS or through the open market, right? So
Correct.
let's talk about finding off-market deals, off MLS deals, sharing some tips on how investors can actually go out and find these hidden opportunities, because I think you'd agree that is the private money opportunity.
Absolutely. So, for example, I just did a deal, closed on it 2 weeks ago, and it was an oceanfront condominium here at Atlantic Beach. I'm in Morehead City, North Carolina. Atlantic Beach is right across the bridge. And so I netted after realtor fees, and I only had the property 5 weeks, $160,000. I bought it with private money for $425,000, and it only needed $11,000 in rehab. That isn't even a rehab, $11,000.
Right.
I mean,
Yep.
interior paint and a little bit of sheetrock repair. Totally furnished with luxury furniture. Oceanfront, bought it for $425,000, put $11,000 in it. I sold it for $628,000.
Oh, where'd you find that deal?
That's the reason I'm telling you the story, is because when you use Google ads, paid Google ads,
Okay.
that's where someone's going to Google searching for sell my house fast, buy my house fast. There's 75 hot different phrases.
Yep.
Well, that's where the lead came from. And so the lead came in. He had 2 big motivations. Number one, he didn't live in the area. Actually, 3 motivations. He didn't live in the area. He inherited this condominium, oceanfront condominium, from his parents. Didn't have any interest in it. Couldn't make the mortgage payments. And it was going to the courthouse steps as a foreclosure sale in 2 weeks from we hearing about it. We closed on it in 5 days. 5 days after hearing from him. Of course, you're not going to close a deal in 5 days unless you've got a great relationship with your private lenders. I mean, I'm paying $425,000 cash, right?
Right.
And the real estate attorney or title company that's going to be closing your deal, got to have that relationship in place. But the point of that story was to answer your question. I'm getting a ton of leads from Google ads, and I don't use just one Google service or vendor, 4 different Google services. So I'm like, I want to own this market. Anybody that goes to Google and is typing to sell their house fast or sell their house, period, I want to get the lead. We also do Facebook paid ads. Been doing that for a long time. That's a picture of me just holding a yellow bandit sign that says I buy houses and my phone number at the bottom of the bandit sign. We do direct mail. We actually mail direct mail 8 sequential letters to every owner that's facing foreclosure in our area. I got a full-time outbound caller that's calling potential sellers. So it's a small market, but I'm dominating it by all the different marketing channels.
What you said that really sticks out to me is that you're going direct to consumer, you're going direct to homeowner, direct to seller, I should say. And for everyone that's hitting their head against the wall in the current real estate market, trying to negotiate deals off the MLS and deal with the real estate agents and all that, by going direct to seller, by doing, you know, consumer direct marketing, as we call it, whether it's online or direct mail, that's something I've been doing myself since 2009. I know the power of it. That's how I built my personal financing business, and at least up until recently, I should say. And, you know, to hear that that's the key to success, right? So you've got these non-traditional methods of finding sellers before real estate agents get them, before the open market knows they want to sell a home. And the way that you're dominating, like you said, what we call omni-channel marketing, you're using online ads combined with direct mail, a sequential direct mail that's hitting them multiple times, because most people don't respond right away. That's why you're successful. So we haven't even gotten into talking about your course and your methodology and what you teach, but I think it's important that everyone knows that here's someone that has this private money figured out already, that's done all these deals. Like I always say, piggyback on people that are successful. Don't reinvent the wheel. You know, if I wanted to do this with Jay, I would be saying, hey, let me get your direct mail sequence, right? I want access to that. I want your Facebook ads so that I can put my picture on them. And all of our listeners, you guys can piggyback on Jay's success, use his methods, you know, get involved in his inner circle, as we'll talk about. So as we move, you know, through our process and our discussion here, I want you to talk about some challenges that you've had, because we're talking about making all this money, right? Big profits per deal, over 80,000. Deals don't always go perfect. There's always problems, issues, stumbling blocks that come up. Talk about a big challenge that you faced on one of these private money deals, how you overcame it, you know, talk about really persevering through it and what it meant to come out the other end.
That's a great question. Probably one of the biggest lessons and most expensive mistakes that I have made that I want to share, because what I'm getting ready to share can save you that's listening to this show a lot of money. Don't make this mistake. So, years ago, I bought a condominium over on the beach, and it was a foreclosure, and I bought it at the courthouse steps. This was prior to my private money days. This was in that first 6-year window. And so I'm going to describe the mistake that I made, and then I'm going to give the solution that if I had done the solution, I never would have made this mistake. Here's the mistake I made. I bought the condominium with the intention of flipping it. I bought it with the intention of buying it,
Yep.
fixing it up, get it just like the story I just told, that I netted net $160,000. That was the intention. Well, I bought it. It sat there a while before I could get the general contractor there to do the rehab. So that finally got done. We finally got it on the market. Well, by the time I got it on the market, the market had started to turn and go down in value. Well, I was stubborn and stupid, and I wouldn't bring my price down. I kept holding my price and holding my price and holding my price as the market continues to go down. Well, of course, I got all that carrying cost going on. I used 2 different institutional lenders, one in first, one in second. That was back in the day. You could do those no down payment creative deals. And so I'm bleeding every month, bleed, carrying costs, mortgage payments, nothing coming in. So finally, it got so bad and so painful, I said, I got to stop the bleeding some kind of way. And I wouldn't let it go to foreclosure because I wanted to save my credit. And so, man, I got to put this on the rental market. I mean, I got to have some income coming in. And so I put it on the rental market. It would only rent 12 weeks out of the year because it's a beach property, right? A beach condo. So for years, Robert, I hate to even think how many years, that property bled my checkbook. And here's the mistake I made when I bought it. I bought it with the intention to flip, and here's the mistake I made. I did not run the numbers on whether the property would cash flow and sustain itself and cover the underlying mortgages and cover the underlying carrying costs through rent before I bought it. Well, if I had, here's the lesson. Even if you're buying a property, a single family house or whatever, if you're buying it with the intention to flip it, don't just run the numbers on the flip. Also run the numbers on what, if you get stuck with that property, what will it bring in on rent, and what's that cash flow look like? And if you can't get a positive cash flow, you shouldn't do the deal, right?
Know your numbers. We always say know your numbers in real estate investment. This is a perfect example of what happens when you don't know your numbers up front, or even in some cases, people are just overly optimistic on their numbers, right? On what they're going to get in rent or the vacancy rate, et cetera. So huge takeaway. And I think almost all real estate investors, I feel like, have a story like that of a huge obstacle where they held a property too long or something like that. So it's definitely interesting to hear that that's the case. So how did it end up in the end?
Well, I finally sold it 2 years ago.
Okay, so you just held it, held it, held it,
I just
held
held
it,
it, and then I said,
finally
"Okay,
sold it 2
well, I
years
waited for
ago.
the market finally came back
Right.
to where," and of course, I had paid the mortgage
Yep, yep.
significantly down, you know, and the rent that I had come in, helped a little bit along the way. But you know what, Robert? If I had not made another big mistake simultaneously, I would not have made the mistake I just shared. Here's
Mhm.
the biggest mistake I
Okay.
made. My very first 6 years in this business, I did it on my own.
Yep,
I read a few
yep.
books. I read a
You
few
reinvented
books.
the wheel.
Oh yeah, I mean, I started from scratch, and I mean,
Yeah.
there's no telling how many hundreds and hundreds of thousands of dollars that I wasted and I lost because I didn't know what I was doing. I didn't know what I didn't know what I didn't know. And so here's the solution. If you're listening to this show and you haven't started in real estate investing, or maybe you've just started, and if you don't have a coach or a mentor to work with, that is a big mistake because
Mhm.
here's what I say: you're going to pay for your education one way or the other. And I tell you, you do it my way that I did it, it costs a lot more making those big mistakes than, working with a coach that knows what they're talking about. So
Mhm.
I could have circumvented those big, huge mistakes if I'd started working with somebody that had already plowed the ground and they had already made their own mistakes.
Mhm. Yeah, I mean, no, that's a great point for sure. And I think we always talk about building a good team around you and having good mentors. This is proof positive of that. We'll talk about what you offer as far as that education in a second. But before we get to that and wrap up, let's talk about the current market and opportunities you see in the next 12 months. To bring some context in, we're, early August 2024 at this point, and it's a scenario where we've seen a seller's market almost everywhere in the country. We're starting to see a little shift, maybe some cracks in certain markets, but especially in the Northeast where I'm located, really robust seller's market. We haven't seen in many, many decades here. Okay. So there's a lot of people beat up, bruised, and just feeling bad about being a buyer in today's market. Okay. So, with that context, can you talk about some opportunities or trends that you see for home buyers in this market, like in the next 12 months? What do you see happening? How can people capitalize?
I've got two different ways or two different angles to answer that question. First, let me answer it from the seller perspective, and
Hmm.
then let me answer it from the buyer perspective.
Okay.
From the seller perspective, I don't see it changing on the
Okay.
big picture. I think we are going to be short on inventory of houses for sale on the big. Now, there's pockets that are exceptions to this, but I think we're going to have a shortage of inventory for a very long time. And there's lots of reasons for that.
Right.
Lots of reasons for that. First of all, is the demand. I mean, the demand for housing continues to increase every year, and the inventory of housing that's available is not keeping up with the demand at all. So I think we're going to have I think
I
for that
agree with
reason.
you. Totally
Mhm.
agree with you 1,000%.
Yeah. And, so from that perspective, it's going to be still a seller's market.
Hmm.
However, we've got so many variables going on that are affecting this scenario. Mortgage interest rates
Hmm.
from the buyer side, I believe, and it's going to be partly dictated by the political arena
Hmm.
and what administration
Right.
is going to be coming into power and to play this coming November. But I bel I don't believe that interest rates can maintain as high as they are
Totally
for
agree with you.
for a much longer period of
Oh yeah,
time.
they're coming down. We may have a Fed meeting here in just in the next few weeks where they either cut the rates or start talking about it. We're already seeing the activity in mortgage bonds pricing in a rate cut here coming up. So it is making it easier for clients to buy. I am locking in buyers at lower interest rates. What opportunities does that create, though? Because that's going to bring more buyers into the market, like you're saying, with that inventory issue. So we're going to see prices either stabilize or maybe even go up another 5 to 10% in some areas, right? What opportunities, though, can there be?
Yeah. Yeah, I agree. So with there being a shortage of inventory, then when has there been a better time to get into real estate investing? If you can find the deals, right? If you can negotiate the deals, if you can have the private money or your relationship in place with your mortgage lender, and you know you can close on the deals, then this is a great time to be in real estate investing, because you don't have to be worried about being stuck with a house like the story I just shared. However, I have pivoted. I don't have any worries of being stuck with a house,
Hmm.
because if we have a market that turns
Right.
down, I'm not going to cash out. I'm going to sell them on lease purchase or rent to own. And when I sell a house on rent to own or lease purchase, I don't care what the market does,
So what you're
because
really getting at, though, Jay, is that you feel like the current market for home buyers that's been difficult is going to maintain the same difficulty, if not get worse, as a regular buyer buying properties with real estate agents through the open market, the MLS, the website, so to speak, right? The real estate websites. But if people can adapt maybe a different strategy or structure to investing in real estate, specifically with the private money that we're talking about in today's episode, there's a whole group of uncovered there's a whole new market, I should say. There's an entire breadth of properties, ladies and gentlemen, that you are not seeing on the MLS. There are motivated sellers that are not listing their homes with real estate agents. Okay, they're out there, but you only get them by being consumer direct, seller direct, like Jay is talking about the strategies. And it's really powerful to have that stuff. But I'm never someone to say don't go buy your first home, but I know that there's a lot of listeners that have been beating their head against the wall for 3 months, 6 months, a year or more, saying, I put in all these offers, I'm done, I'm throwing in the towel. I would really tell you, before you throw in the towel on being a real estate investor, you need to check out this strategy. You need to talk to Jay. You need to look at his solution to this. So let's focus our last few minutes together on talking about the mentorship, because that's the key to this. I would never do this alone. It's a lot of risk. It's a lot to learn. Jay said he did it the first 6 years on his own, I believe. So what packages or information products do you have, or inner circles do you have that people can access if they're hearing this, they want to get involved, they want to create their own private money lending business, or they want to be an investor with you on these projects that you're already sourcing? They want to be on your list of private money investors. Let's talk about that.
sure. Well, I have multiple resources, but I want to offer two to keep it simple to your audience. First of
Okay.
all, I have a best-selling book. It's called Where to Get the Money Now. Where to Get the Money Now. And this talks all about what we've been talking about on private money. This is not an ebook. This is actually a
Okay.
book. And you can get it on Amazon for $20, but don't spend $20. I'm going to give it to you for free, just cover shipping. And so I'm going to give a URL, and believe it or not, the post office is still in service. We ship this out 3-day priority mail that'll come
Mm-hmm.
right to your doorstep. And it will walk you through the exact steps on getting all the private money funding for your real estate deals. And here's where you get the book. Go to www.jayconner, and by the way, I'm an ER, not an OR. So go to JAYCONNER.com/book. So that's jayconner.com/book, and we'll ship it right out to you. You'll have it in 3 days on 3-day priority. The other resource that I want to give out is I just launched my brand new 7-day private money challenge.
Nice.
Hardly anybody knows about this at all. And so here's what it is. I went to the studio, and this is hot off the press. I recorded 7 videos that are only like 15 to 20 minutes long. So it's very digestible,
Mm-hmm.
very easy to follow along. And so when you enroll in the 7-day private money challenge, you'll immediately receive the very first video. So you'll see me right there interacting with you. And then the next morning, day 2 through day
Mm-hmm.
7 at 10 a.m. Eastern time, you'll receive each subsequent video. I'm telling you, this
Nice.
7-day challenge will give you all the foundational information. So if you like to read, you got the book. If you don't like to read and you just want to sit, on your smartphone and watch me on video for 15 or 20 minutes a day, here's how you get into the 7-day challenge. Just go to that same website, www.jayconner.com, and right there on the landing page, I'm inviting you to join me in the 7-day challenge.
That's it, guys. I mean, you've got the Private Money Authority right here telling you how to really piggyback on their success. And if you want to do it on your own, get the book. If you want a little bit more of a walkthrough, the video, and I'm sure that there's some other more ongoing support options that you have as well that people can get involved with. So check out Jay's book, the website, jayconner.com, and all of those resources. And thank you so much, Jay, for sharing your valuable insights, for the strategies that you gave us today. You opened up a whole new world of real estate investing, I think, for a lot of people that may have just been down on it and unmotivated based on the current market. So be sure to check out all Jay's stuff. And Jay, it's been a pleasure having you on the show. Thanks again for your time, and take care.
Robert, thank you so much for having me, and God bless you.
Thanks for listening. If you have questions about the information we've covered or would like to discuss mortgage financing for your situation, you can reach Robert Weinberg by visiting www.robgw.com.